All right, want to do a quick little video here just on the overall market. We had a pretty rough day today, closing down over 3% on most major indexes. And I think the one leading the way was the NASDAQ closing down over 3.5% on the day. But since on the futures, we've seen a nice little rebound. Currently up here on the screen, I have the S&P 500 mini futures. So this is going to be /ES. And this is the 4-hour time frame. So we're getting a nice picture of late of last year and rolling into early this year, or all of this year so far, as we are just in the early stages of it. But you can see I've cleaned it up a little bit, and I just have a few trend lines here up on the screen. But we have this overall channel that we have been moving through since late last year, late September of last year. And you can see this dip right in here was the first real impact that the coronavirus had on the market. As more and more cases arose and as the death toll started to rise pretty quickly, that this little dip in the market is what we saw. So we broke out of this upward channel, and then as it seemed as if we were getting it under control, new economic data was coming out that showed positive growth in the U.S. market. We started to see the market rebound and push to make new highs. And now, as more cases have been reported, more deaths have been reported in different countries, spreading across the globe, and the fear that this is going to cause more economic uncertainty moving forward with a lot of these businesses that operate in China or produce products out of China. We are starting to see a little bit of increased volatility. I don't even want to say a little bit. Like, this was a lot of volatility that we saw in the market today. This is one of the biggest point drops that I've seen. Now, again, the market is pushing a lot higher, so these point drops, percentage-wise might not be the biggest percent loss, but it is a large point drop. But we came down to a pretty solid level down here around 32.20, and I left the main support and resistance lines up here, and then we can tack on a few more as we dive in. But this 32.20 mark is where we bounced, and I was curious to see if we were going to hold it because we had moved through some other ones with ease as we were moving down. But tacking another one here around 32.50. I'm going to go ahead and tighten this in a little bit closer. I was marking another one right in here around 3,300. As you can see, we had a couple tops back here, a little bit of a top right here. There was another one that we basically just gapped below on, and we closed on it on last Friday. And if we go into the 20-day, maybe we can, no, that's not really a good representation. We'll just go back to the 4-hour, but we gapped down below it, so that was a pretty rough sign that today was going to be pretty grim as far as a reversal midday. But now that we have hit this solid support down here, and this is dating back to late of 2019, early of 2020, we had multiple days where we were using this as a support. And then also when we look here at the beginning of February, when we had the first dip based or stemming from the coronavirus, where was the low that we saw? It was right around 32.20. So the fact that we're starting to see this bounce, I think, is a good sign. I'm not saying that we are now going to reverse back up and this is the bottom, because as we move out to longer term time frames, we can see that we've broken down some of these bigger moving averages and some of these bigger trends. But it is nice to see that we are not moving through this important 32.20 level. If that was the case, I would be looking here at the 3,200 flat mark. You can see it kind of acted as a resistance back in here in late 2019, acted as a support in early 2020. and we had some volatility in the market. So that would be the next point that I would look at if we were to break down from here. But you can see we are currently battling the 9-day moving average here after hours as the futures are still trading. If we were to break through that to the upside, again, there may be a lot of bag holders as we move into market open tomorrow that are looking to get out. Now, if there's good news and there's a lot more buyers that are seeing this as a bottom and a dip buying opportunity, we could very well move up pretty quickly back towards 3,300. But I would just be a little bit, just a little bit hesitant to throw all my chips in this basket and hope for that move or even a push higher above it. It could very well happen, but with the drop that we saw today, I don't necessarily see that as super plausible or the first result moving forward. Nonetheless, I'm going to go ahead and compare this to SPY. So SPY is the ETF that a lot of people trade. That is reflective of the S&P 500. And again, okay, so this chart is looking about the same. We're still in the 4-hour time frame. So we can see our breakdown, and we can actually move this one. I guess I never actually moved it across. But this was really the marker that last Friday we came down close to, and we actually moved back up as we were moving into close. So it looked as if we were going to have a decent close after a pretty rough red day that maybe would have sparked a little bit of a green Monday. But they do say that trends seem to carry from Friday into Monday, and this was definitely a supporting case for that as we continued this sell-off. But that would be that upper level that we gap below on, and then selling through the majority of today. And the important level here, it was 32.20 on the futures, and here it is $320 a share. Was that important level looking back at when we first saw the impact that the coronavirus was having. That is where we set our lowest, right around 322. Obviously, our wicks do go a little bit further. No support or resistance is perfect. But when you look at just the base of these bars, and you're not counting these wicks, that is where we are seeing that price level. So we'll go ahead and back it out. Again, this is really just the same chart as the futures that we were looking at, just different price levels. So 322, we saw the nice bounce. We are now up, trading right around this resistance, around 324. Again, this isn't exact as it does say that SPY trades 24 hours out of the day, but these prices can vary throughout the evening and then into the pre-market hours. You just kind of have to wait for more trading to ensue. But if we were to move higher on these, the target level that I would be looking at as far as a resistance goes would be up here around 328. And that that's another $3 to the high side. That's about a 1% move. Again, we are down over 3% today, so that would be roughly about a third of the way back up. Or a third from where we are now. If you do it from these lows down here, it would be about halfway from the loss that we saw today. But nonetheless, there could be a resistance up here around 328.50 would be my mark, and then above that would be this level that we gap down below. So we'll call it at the lower end. I'd really say the mid 330s up through say 332. It could be a point where we're just kind of consolidating and waiting for a push higher, or if we fail, if we get to that point and then we come back lower, we might try and bounce off of a lower support, if that makes sense. But I just want to move it out quickly to the longer term time frames and kind of just talk about the breakdowns that we were seeing there. So again, here is, now it's a little bit congested with all of these lines, but if we look at this longer term time frame, we can start to see that we've broken down below this 9-day moving average, and it looks as if we're kind of forming a top here, and that we might be breaking lower. and starting a trend to the downside. If this dip is bought up and we start to push higher again, that kind of changes that fact. If we push back above that 9-day moving average, if we look at the daily, we can also see that we're sitting on the 100-day moving average, which is important. I think if we were to break down below that and we start moving towards the 200-day moving average, which is a good bit below, but you can see today we dipped from the 50-day moving average all the way down to the 100-day moving average. So, I mean, we could quickly, if this starts to accelerate more rapidly, we could quickly see ourselves down at this 200-day moving average on the daily time frame. And if we break down below that, that might really start to trigger some symbols and lead to more of a waterfall sell-off of more panic selling. So those are just some things to keep in mind. Those longer-term time frames are starting to break down a little bit. They're not flashing red to sell and sell and sell, but just something that you probably want to keep in the back of your mind whenever you're doing your trading, depending on the time frame that you're wanting to get in and out of a trade. So hopefully this video was relatively helpful, maybe sparked a little bit of insight, something that you didn't see before. So I appreciate you guys watching, and I wish you the best of luck in your trading.